Hello, and welcome to another episode of Executive Suite. I'm your host, Thomas Braun, and today we're here with Tristan Pelloux. And Tristan is an M&A advisor. He has a firm called Strategy Y, and he also runs Fintech Review, which is an online magazine for the fintech industry. So, Tristan, can you please introduce your consultancy to us first, and then we'll talk about Fintech Review.
Thanks for having me, Thomas. So Strategy started 5 years ago, specializes in cross-border transactions, mostly complex type of merger. I do lots of post-merger integration, particularly. So I try to work on deals from the very start to trying to figure out which country you're going to go next or which product you're going to expand into, all the way to the integration plan. Because I do believe that whenever you do an M&A transaction, you should start thinking about the integration from the get-go, from the deal, incorporate this thinking in the due diligence to facilitate the integration and actually realize the value that you're paying for. So that's the kind of work that I do.
Interesting. So now you mentioned due diligence there, and that's caught my attention, perhaps because I'm a lawyer. Can you give me some examples of where you've stepped in early and you've helped a client uh, figure out what kind of due diligence that they want, and what kind of due diligence are you talking about?
How long do you want to spend on it, and how intensive do you want to be in that process in terms of, for me, what's key? Well, obviously the legal part, the financial part, but where I see a lot of challenges is kind of not looking enough at the technology integration, migration of clients into a new platform, or oversimplifying cross-selling, for instance. Yeah, I'm just going to sell my product to that other portfolio, and then actually you're realizing maybe at the legal level you can't. It's not that easy. Maybe at the technical level it's not that easy. So that's the type of things that I see a lot. That is, it's fine to do like very fast due diligence and thinking, look, we'll figure it out later. But the challenges come when you kick the can down the road for too long, and eventually you still have to figure out how to simplify the legal structure, how to migrate customers to the same platform so that you can serve them better. And I mean, what I'm saying here applies mostly, well, the kind of deals I do is mostly around technology businesses, SaaS, marketplace, e-commerce, where for me, technology is a big aspect in the due diligence phase, but also sales, like the growth engine, revenue. And then depending on the countries, legal needs to be looked into quite a bit. If you do cross-border across Europe, different legal systems, different structures, different way to deal with shareholders, with a taxman, with a number of things that you need to take into consideration.
Sure. So, okay, well, that's interesting because when I think about due diligence, I think about the legal due diligence, and of course, it's important to make sure the technology works. And a lot of people lie about technology, and they're trying to sell their company. I guess they want to get as much money as possible. So that's actually something that's very important now. So you're doing mostly SaaS companies, you said, and I'm assuming that you mean in the fintech sector. Is that correct?
Yeah, and beyond. Actually,
Hmm.
several deals I've done recently are not in fintech.
Okay. And how is the fintech sector doing? Is it just as strong as ever, or is it getting better? What's the trend like?
Well, as strong as ever, I wouldn't say so, because fundraising has dried up a bit.
Hmm. Oh,
It's mostly, well, it has not collapsed, but it's far from the peaks in, I think it was 2021, 2020, 2021. Global fundraising was very high, and now not so much, which is driving M&A activity. So it's more a consolidation phase right now, where mature players have passed the stage of being profitable, are able to acquire others, and are better situation. So it's evolved, but some players have definitely come out very strong. So if you look, Klarna have done their IPO last week, far from their valuation from 2 years ago, but still, it's a 15 billion business now. Stripe is quite strong. So yeah, it's mostly a consolidation phase right now.
Okay, so would you link the decrease in available funding to a like a global market wide decrease in funding, or is it just are you just talking about fintech?
I'm just talking about fintech
Hmm.
here. That a lot of money has gone into AI instead
AI.
of
Hmm.
fintech because it's the new shiny thing until the next one.
Okay.
Um, so yeah.
So if you were a fintech AI company, you would market yourself as an AI company then instead of a fintech company?
Yeah, definitely. Everything is an AI company. If you look at the pitch decks right now,
Hmm.
everybody is doing AI. In reality, no one is doing AI. Everybody's using some AI from someone else,
Yes.
but everybody is an AI company now.
Yes.
If you believe everybody is saying that.
What kind of applications are you seeing AI being applied with fintech? Or because a lot of these AI companies, they look a lot like SaaS companies. They might have like an AI agent or something like that they're marketing. What are you seeing?
Um, yeah, I think the low hanging fruit is companies incorporating AI in chatbots and in helping customers figuring out basic stuff by just plugging in ChatGPT or whatever, and then it says, "Hey, do you want help to draft this?" Or do you want? But I think the real good use cases is uh, are companies that manage to leverage AI to analyze data, for instance, for credit scoring, for risks. This is not new. 10 years ago, I was already seeing companies leveraging AI for risk modeling, um, or fraud monitoring, for instance, as well. Because, basically going through tens of thousands of transactions to see the one that are fraudulent, this machine does it better than you 100% of the time. So these are the boring use cases that I think are quite powerful in fintech, much more than anything else. And companies are definitely already using it.
When they're analyzing data, just a little aside here, are they just analyzing purely financial data, or do they look at other characteristics that a person might have, like their level of education or their occupation, whether or not they're married or have children?
The powerful applications are usually when you go beyond your credit score, beyond the traditional models. And I remember a company I was doing, I think they're still doing student finance, and they were looking at the degrees that people are pursuing, opportunities within the field, and calculating a risk based on future income rather than uh, past transactions, which is quite interesting. And this is where you leverage different types of data in order to really project yourself instead of traditional credit scoring around, hey, do you have a fixed address? Do you have, what is your debt? What is your income? Which is what banks have been using since forever. But there's lots of holes in these models. And this is where building AI models that can learn over time and you can inject a lot of data based on behavior. There's lots of interesting studies actually on that. Like, how long you are on your phone, or what type of screens do you use, and you can connect lots of dots like this and calculate a different type of risk profile.
Hmm. But they're trying to quantify these things. Now, has anyone, to your knowledge, figured out graduates of different faculties having different rates of repayment? And I don't mean based on their salary, I mean based on their mentality.
Ah, so these guys, they were more, I guess, a bit more basic in the sense they were looking at the field, and if you were studying, I don't know, arts, or if you were studying business, then you would have different risk profile, because the the, the chances that you get a job, that pays well, that it's a permanent position in an industry that is growing or not. There's a scarcity in your sector and employment percentages within a certain sector.
Historically, university students were an excellent risk. They always paid back their loans.
Yeah, and it's much more expensive than it used to be. So the debts are much higher, the outcomes and the possible jobs are not as great as they used to be. There are alternatives now that you can learn how to code and become a developer, and you probably have better outcomes than doing a bachelor degree in most universities. So
Yeah.
that's a reality.
Yeah. Well, let's talk about what you think are the other trending areas in M&A besides AI in general, because any sector can then just add AI on top and say now we're an AI company. The problem with somebody who decides, well, AI is hot, so I'm going to start my AI company now. By the time you figure it all out and get going, it might be too late. That bubble may have burst by then for these companies, because there seems to be thousands of them and they all have the almost the exact same website drafted by ChatGPT. It's kind of hard to tell the difference between some of them. I guess some will earn revenue and others won't. Ultimately, that will be the deciding factor. I've got a couple questions for you. One is it too late to start up an AI company now? And what other areas are trending for people who are thinking about starting up their own business, but they want to make sure that they're in a sector where they can actually raise money?
Um, I think that, well, there's a lot of noise, and uh, and people think at it from the wrong perspective, in the sense that they think about the technology rather than the business case or the problem they're trying to solve. Uh, so they start from AI, and they're like, okay, what can I do? Is it, or, oh, I should use AI to solve HR problems. And I'm like, well, okay, but maybe this is not the technologies that you. So using AI in your business, it's not too late, and it's actually quite easy now to like plug into predictive models. Starting a company that is actually going to build AI, it's very expensive. The problem is hiring the people. There is scarcity of talent, so you will need a lot of funding to actually, unless you know how to do it, but you will need a lot of funding just to attract the people. And this is what the big guys are doing. They're just investing billions and billions. So it's not even millions, it's billions, even to attract top talents. So realistically, if you want to start a company that is building the actual models, unless you know how to do it yourself, I see it's quite impossible. However, it's very easy to leverage AI. And I do, like, it's very easy to plug into OpenAI and use ChatGPT's models to do stuff for your business. Um, but you need to go back to, okay, what exactly am I doing here? What's the problem I'm solving? Do people care? Are they willing to pay for it? What's my market? So just thinking about it from that perspective, and then building your business leveraging models. That's fun. Um, and other things that are quite interesting or hot. Oh, like in finance, there's lots of things around payments where it's still inefficient, still very fragmented somehow. You have some big players, but it's still not great for businesses, for instance. For individuals, I think it got better, you know, and for businesses, it's still a pain to pay someone abroad. Fees are still high. Invoicing is still not great and not super flawless. So I see a few problems that can still be solved in the fintech space.
Yeah, and will those problems be solved with crypto?
Why not? I think on cross-border transfers, um, somehow it could. In checkouts, you go to supermarkets, is crypto changing anything? I'm not sure. Uh, but in tokenization of real assets can be an alternative to other structures like ETFs or mutual funds. For cross-border, I've seen that it works quite well, using a stable coin like USDT or, like the ones that are pegged on the dollar, for instance. Wallet to wallet is much faster than trying to send money to a bank account, and you have less intermediaries. But again, for me, crypto is what is a specific use case you're trying to solve and how are you going to use crypto rather than starting from the crypto point of view and trying to find out what you might do.
Hmm. Okay, let's talk about fintech review now, if you don't mind. How long has that been around?
So it's going to be 6 years, just before the pandemic when the world was a different place. It started as a blog where I wanted to just talk about what was going on in fintech. I was working in innovation in banking. Then it evolved to being a bit bigger than that and spent a lot of time talking to lots of people in the industry, and it scaled a bit. So I use it as a platform to air my views, but now also I work with brands and like talking about their business, what they want to do, their roadmap, and understanding where the market is going.
Yeah, and do you write the articles yourself?
I do like some of them, and then people write for fintech review. When I do interviews, actually, it's mostly people writing their responses. So not everything is written by.
And are you putting out an article every day, one a day?
Yeah, I try to. And actually, I mean, there's plenty of topics and companies. If I were to do a review of all the companies out there, would still take me some time. Also, like some basic, I try to cover as much as possible.
Yeah, it looks very interesting. And you're just doing the articles Monday to Friday, or you're doing like 365 articles a year? How does that work?
Not 365. I took a break in the summer a bit, and then around Christmas, I will also shut it down mostly when people are not so interested so much about reading about crypto and
Mm-hmm.
cross-border payments. But
Mm-hmm.
otherwise, I try to publish also on the weekend because so people do read on Saturdays, Sundays.
Neat. Okay. And can you give me an example of maybe an article that stands out from the last month or so?
So I've released like a big top 100 tools for personal finance to try to cover all the tools that people might need in personal finance, like fintech tools to help on personal finance, like from all the way from like, neobanks and payments to wealth management. So that was quite cool. I don't think it's released yet. It's in my calendar. Something about how it's hard to predict the price of Bitcoin, uh, which was interesting to write, because there's lots of noise, and actually people always ask me like, "What's the price and what's the price gonna be?"
Yeah. What do you say to them?
I say that finger in the air. No, so there are various ways, but it's it's very much supply and demand, the same way as gold is priced. The only thing is that gold is used for industrial applications, which means it cannot really be zero. But at the end of the day, what you think it's worth, what I think it's worth, and this is the price. So it's the same with Bitcoin somehow. And as long as people believe it's a store of value, then the value stays where it is, and then it goes up. Um, but it's very hard to predict. That's why most people get it wrong. Uh, my point here is that the article is not intending to say that the price is going to be that much, just to say that it's hard. So whenever you read, hey, it's going to be 1 million, sure. It's going to be 10,000, well, sure, okay. But it's going to fluctuate a lot. But the same way it's hard to know the price of gold 10 years from now, it's very hard to know the price of Bitcoin 10 years from now.
Okay. But gold's been around for thousands of years. So I think people just intuitively know that it's a more solid investment. Now, my problem with Bitcoin was that it seemed to track the stock market to a large extent. And when the stock market crashes, Bitcoin crashes. For me, the original attraction was that, well, this might be something that will remain valuable even if the stock market crashes, which is what I think gold investors like. They just assume that if everything else goes to hell in a handbasket, that their gold will remain valuable. Do you see that there's a strong relationship between cryptocurrencies and the broader stock market?
Yeah, no, you're right. I think originally lots of people were saying that they were not correlated and same as gold. And if the stock markets would crash, and crypto markets would stay up. But actually, even bonds and stocks and gold, everything is much more correlated now. So when you have a market crash, everything tends to crash much more than before. Before you would say, hey, yeah, but don't worry, if stocks are crashing, bonds are going to hold up, or everybody's going to go to gold. But right now, the correlations are not as strong. However, yes, like definitely crypto markets have moved alongside stock markets. Um, Everything is all-time high anyway, like around across all asset classes. So it's very hard to know. Uh, However, yeah, I don't think it's as secure as as secure as safe as a lot of people think. If the stock market crashes for real, the crypto markets are going to crash as much. So if tomorrow's S&P is 50% lower, I can bet you that Bitcoin will be 80% lower. I don't believe that it's going to stay up or go up. When people are really afraid, they go out of all asset classes, they go to cash or gold, but they don't go into something even riskier than the stock market. Doesn't make a lot of sense.
Yeah, probably more volatile than gold and real estate. So, okay, well, that sounds very interesting. So, again, for everyone who's been watching this, it's your website is fintechreview.com for the fintech magazine. Would you call it an online magazine?
Yeah.
If you want to know about fintech, give yourself a little bit of an education there. It covers so many different topics. Was there anything you wanted to say before we wrap this up?
Yeah, no, I mean, I encourage people to come and read the article. It's for every level. So, from the basics of understanding the various bits around crypto to understanding more complex topics. I also have a newsletter where I cover more topical things. So Klarna's IPO in the US last week, or what the Fed is going to do and how it impacts fintech. So I encourage people that are curious about it. Which curiosity for me is key. Is that I'm a visiting professor at university, and this is what I tell students as well. Be curious, because it's how you learn and you get better at your job by being curious about various things in life.
Well, thank you again for coming on to the program, and we'll say goodbye right now. Thanks everyone for watching. And if you like this sort of content, please subscribe and like this video. Bye for now.
Thanks. Bye.